In the 1990s, Japan's economy was everything, and now the country is seconds away from a complete economic meltdown. The former powerhouse is crumbling under its three-tiered economic pitfall. Japan's national debt is soaring, its currency is failing globally, and the growth in GDP is negative. And so far, the government is putting band-aids on the bullet holes. In this video, we're detailing the impending economic doom of Japan by revealing the silent, bizarre, and systemic change in the government's policies. And well, it doesn't get worse than this. Let's get started. Japan's soaring debt. In the status quo, the recent trend in the global financial fiasco shows that more and more governments are piling up on the national debt. While the most widely discussed example is the United States of America, there are certain countries that are worse off. And believe it or not, once the beacon of economic prosperity through innovation, Japan is at the forefront of a devastating debt situation. It's almost diabolical when we think about it, but starting from April 2023, every child born in Japan is indebted to its own nation. Such is the state of the country's outstanding balance of loans, financing bills, and government bonds. In these unprecedented times, the land of the rising sun is on the verge of losing its global economic hub status. So what's happening? As of March 31st, 2023, the country's national debt hit a new record of 1,270 trillion yen, or $9.2 trillion US. Now, Japan is hoarding its debt at an accelerated rate starting in 2022. In fact, this is the 7th time that the country's debt has crossed its prior ceilings. But in the year 2023, the country hit a new all-time high, leaving Japan's economy in nothing but shambles. As far as Japan's concerned, the systemic shift in the Bank of Japan's fiscal policies will avert any government shutdown or prolonged recession. Yet experts see no change in the country's spending patterns that were focal in derailing the country's finances. What really bothers experts about Japan's situation is its low recovery rate from the global pandemic. You see, only in March 2022 did the country's rolling debt have to take an additional toll of 29.2 trillion yen. This particular response came in the aftermath of sheer economic destruction by COVID-19. So Prime Minister Fumio Kishida's saving grace moment came with the fiscal stimulus measures that were considered important for keeping the boat floating and cutting through the inflation-driven prices. And well, such policies didn't work like a charm as the Prime Minister had officially hoped for. It's true that the country was struggling under inflation. After all, the citizens in Japan were habitual of living with minimal costs of living before the debt snafu. But as we speak today, people are now living through a three-tier economic collapse of their times. Japan's currency is failing, its national debt is at an all-time high, and the GDP growth is negligible. Since 2022, the per capita debt for all citizens in Japan is more than 10.4 million yen. That's more than $75,000 US. And by the looks of it, Kishida's plan to save the economy has been mitigated at best. Back in 2022, the country was under extreme distress when debt per capita hit the 10 million mark. Now, if anything, that particular statistic is hardly static. In upcoming years, the figure would definitely exceed the 10.4 million yen mark to account for the government's outstanding balance of general bonds. While Japan's fiscal crisis persists, we're seeing two key developments for its citizens. Firstly, Japan would continue to live through the living cost crisis, and second, to make up for increasing debt per capita, the government's only remedy will be increased taxes in all folds of consumerism. The underlying reasons. Now, another critical question to ask here is, how did Japan get into this frightening trouble? Well, there are a bunch of reasons that could be cited under Japan's 2023 debt meltdown section in economic books. First things first, ever since Kishida has taken office in 2021, Japan's overall economic landscape has changed dramatically. Experts call this shift a move away from Abenomics. In a series of turbulent decisions, Japan's Prime Minister is carving a new form of capitalism that's also highly regulated by the state. Yep, Japan is an economic paradox. But what it really knows is that Shinzo Abe's trickle-down economics didn't work, and the rich got richer while the poor got poorer. If stats were to be trusted, Kishida is right about the fragile social mobility in Japan. However, the structural problem lies with government spending on welfare programs and expensive public initiatives, especially when the debt situation is extremely vulnerable. In a surprising decision, Kishida allocated some unprecedented amounts to the childcare infrastructure in Japan while simultaneously prioritizing expensive green energy initiatives. Then he immediately increased the military budget by billions. This sort of inconsistent approach to national budget allocation was perhaps more harmful than anyone realized. realized. It was shocking for sure, but it also set Japan to spend without a solid plan. Not to mention the country was already overspending with the COVID stimulus budget. Even though the allocation was supposed to revive the faltering industrial sector in the post-pandemic recovery, Kishida failed to make other important policy interventions. In one of his biggest setbacks, the people's capitalist structure failed to appropriately tax the rich. So, in a way, the state's outflow of money wasn't proportional to the inflow of the money. To put it differently, Japan can't afford to make expensive policies if its debt payments aren't sustainable in the shorter run. Plus, Japan's decade-old problem is its aging, grey population that has minimal to zero contribution to the country's GDP. Yet, in return, Kishida's long-haul plans need billions to fund welfare and pension packages for the retired faction. While this problem isn't new, Japan is also facing great turmoil, with its slowing population growth. This particular factor has a direct hit on the country's capacity to produce an effective labor force. Not ideal when you're trying to compete with emerging economic hubs like Germany, right? The slowing GDP. Now here's the thing, Japan's soaring debt is only half of the problem here. As we've discussed, the country's biggest pitfall is its very slow recovery from the aftershocks of the global pandemic. So remember back in the 90s when economic gurus crowned Japan as the frontrunner in innovation? The striking, bustling towns of the country promised unprecedented economic growth that was bound to change the world. We can't say Japan hasn't had a solid run, but perhaps the year 2022 changed everything for the country. That's when Japan's real GDP contracted unexpectedly by 1.2%. For the first and third quarters of the year, the country had negative growth in its GDP, and even now its GDP isn't back to its pre-pandemic levels. The economic meltdown came in the aftermath of rising prices of imported energy to keep the country running. The high-sky inflation was unbearable for the citizens who were already struggling with the prolonged currency crisis. Against the US dollar, the Japanese yen is faltering, and it's pretty bad. Back in 2022, the Bank of Japan had to immediately boost the value of its currency by pouring $21 billion into the initiative. While it worked, the yen was still struggling against the reserved currency of the world. When the yen fell to 150 units for a dollar, Kishida's government took another bubblegum measure to rack the currency's value. This mitigating and short-lived measure cost $37 billion, and this is precisely why Japan is on the verge of a complete economic meltdown. You see, the depreciation of the yen was monumental in changing Japan's position as an exporter. Simply put, since Japan's imports are more expensive than ever, the declining demand for its exports can't keep up for a number of factors. The biggest culprit in this situation is Japan's loose monetary policies that can't capture any significant attention from key investors. As part of their post-pandemic recovery plans, many economies in Europe and the US increased the federal interest rates to keep inflation minimal. Believe it or not, Japan didn't follow suit, and that puts them at odds in the global arena. Since Kishida wanted to boost inflation to gatekeep the rising national debt, he didn't have any incentive to increase the interest rates, which of course, investors don't like. You see, companies with deep pockets want higher borrowing costs to make money off their transactions, and Japan simply didn't give them enough incentive to bring their capital to the land of the rising sun. In comparison, countries like Germany or even the US seemed like viable options. Back at home, inflation increased consistently, yet the government also failed to increase wages for its public sector employees. At the same time, private entities were struggling with the currency and inflation crisis. As bleak as it sounds, people don't have enough resources to support the country's traditional consumerism, and that's a fatal cut for the country's faltering GDP. Is Japan on the new horizon of a complete irreversible economic meltdown? Possibly. Enjoyed the video? Give us a like, and subscribe to our channel for more content like this.